Hello everybody, welcome once again to my channel Krishna Singhdeo. Today's video is about the answer key discussion for class 12th ISC students. This is the answer key of the test which was uploaded 2 days back on my app Krishna Singhdeo. इससे पहले कि मैं वीडियो स्टार्ट करूं, I want to say sorry that I could not bring any videos for last 2 days. ये वीडियो ना लाने का कारण था माई एक्सट्रीम बिजीनेस फॉर द रिकॉर्डिंग ऑफ क्लास 10th कमर्शियल स्टडीज़ वीडियो. कमर्शियल स्टडीज़ ऐसा सब्जेक्ट है जिसके बहुत एजुकेटर्स नहीं मिलते हैं हमें ऑनलाइन. एंड पहले हमने मेगा रिविजन सेशन 1 लाया एंड उसकी सक्सेस बहुत ज़्यादा थी. बच्चों को वो वीडियो बहुत पसंद आया एंड दे स्टार्टेड रिक्वेस्टिंग टू ब्रिंग वन मोर वीडियो विच वॉज अनप्लान एंड मोस्ट ऑफ द टाइम ऑफ डे वॉज कंज्यूम्ड इन रिकॉर्डिंग दोज वीडियोज़. दैट इज़ द reason I could not bring any video for class 12, but now we are going to be regular once again as we were earlier. So students, let's get started and we will discuss the answer key of the question paper which was given to you. The prerequisite of the video, watching the video, is that you should have hard copy of the question paper in your hand. If hard copy is not possible, at least have a soft copy in front of you. Just don't start watching the video without having the copy of question paper in your hand. We are students with the answer key. First question was the comparison of one firm with the another firm in the same industry. So obviously when we talk about two different firms, we are talking about the inter-firm analysis. So answer was A, inter-firm analysis. Question number 2 was regarding the requirement of debenture redemption reserve. Since debenture redemption reserve is not required by the company which is a listed company, only DRI is required. The right answer was D, nil. Then question number 2 was regarding calculation of revenue from operation. There was a percentage given of cost of revenue from operation. So for 2016, 2,40,000 rupees and 1,40,000 rupees was your cost of revenue from operation, which is this part over here, and your remaining part was let me just take the yes, this was the second part of the question, and first part of the question was your revenue from operation. Question had asked us to calculate revenue from operation. So 3 lakh rupees and 4 lakh rupees was revenue from operation for the year 2016 and 2015 students. Then question number 3. Question number 3 was regarding the calculation of your net profit, I think so. Let me just check the question paper. So the next question was question number 3, and here the requirement was net revenue from operation was given and some other information was given, and we were asked to find out operating ratio. Whenever we talk about operating ratio, remember the formula of operating cost. Operating cost ratio is called operating ratio also. So operating cost is cost of goods sold plus operating expenses divided by revenue from operation. In this question we were given gross profit. So by deducting gross profit from your revenue from operation means 24 lakh minus 19 lakh, we would have got our cost of goods sold, which was 5 lakh rupees, and under that in revenue from operating expenses plus 2.75 lakh operating expenses we will add. So like this 7,75,000 rupees was operating expenses divided by revenue from operation 24 lakh. So our answer was coming something else, means 32 point something as it was coming, and no answer in the options was matching from this. That is why in answer key you can see none of the above is the option given to you. Then after this, next question was, here is the next question, correct formula of computing operating. One thing was missing over here, profit. This is a typing error, so please add profit over there. What is the calculation, what is the formula of calculating operating profit? So students, the answer was B part of this, where gross profit plus operating expenses minus operating income divided by revenue from operation into 100 was the correct answer. After that, question number 5 was given. It was a pretty simple question except for one tricky thing. over here purchases was given. So whenever we talk about purchases is a part of cost of material consumed, or we can say cost of goods sold. So cost of revenue from operation was given over here. When we think about the formula of cost of revenue from operation, the formula is purchases plus opening stock plus purchases plus direct expenses minus closing stock. So you can see that in cost of revenue from operation, purchase is already included. So then what to do with this purchases which is given to you separately over here? Nothing at all. You have to completely ignore this part, and this is where many students had made mistake. I have live classes over here, and here I had corrected the question paper of the students, and couple of students had made this mistake, that they had taken purchase also in the consideration. We don't have to take purchase into consideration. And operating expenses, yes, definitely we'll see. So when we talk about this comparative analysis, actually comparative analysis is the analysis of horizontal analysis. Okay, so here we take absolute change and then we'll take percentage change also. So you can see over here what is there. This is revenue from operation for both the years, 16 lakh and 8 lakh 40,000, which was 200 times of the cost of revenue from operation. As you can see, I have not written purchases over here because it was not required. Purchases is part of cost of goods sold. Directly I have written cost of revenue from operation in both the places, and then operating expenses. After writing this, we reach to profit before tax, total expenses, and then profit before tax. PBT means profit before tax, then tax component was deducted, and after that we reached to PAT, means profit after tax. And then what we did over here on the right hand side, you can see we had made one column of absolute change, means difference between both the years, then difference divided by the base year, means year 21, multiplied by 100. By applying this formula, we found out percentage change. So this way we had to solve the question. I hope students you could solve this, and do not worry, you can see this answer over here also, and on my app the answer key will also be uploaded in the same folder from where you had taken the question paper. Now let us go for the next question. Next question was also one of the important question, where you had been given regarding the redemption of debenture and what kind of redemption of debenture. Here the redemption of debenture was in lots, and these lots were also not equal in the amount, or a number. We can say 3,000, 6,000 and 6,000. This was the amount which was withdrawn, and this amount was redeemed in different years. And in this question the requirement was also quite different. Requirement was of making the account 10% debenture account, debenture redemption reserve account, and debenture redemption investment account. These were the requirement by the question. So let's see how to deal with this. Here you can see in the answer part, I have made 10% debenture account. When you issue the debenture, you pass the entry bank account debit to debenture application and allotment, and then next entry is part debenture application and allotment to percentage debenture. So these were 10% debenture. First entry is here on the issue. Then in the first year debentures were not redeemed. From the second year debentures were redeemed. So in second year you can see the balance is brought down, and then on last date of the year 3 lakh rupees debentures worth rupees 3 lakh rupees were redeemed. So we have written here to debenture holder. Remember the entry you pass the entry percentage debenture to debenture holder. So here we have written on the debit side of debenture account to debenture holder 3 lakh rupees, and remaining balance of 12 lakh rupees is carried forward to next year. Now in next year again the redemption took place, and this year redemption was for 6 lakh debentures. So here we have written 6 lakh debenture, and again the balance is left is 6 lakh. Now in the last year this 6 lakh rupees is also redeemed. So like this we had to make redemption debenture account. And remember that debenture account is a liability in nature, so it will have entries on the credit side and balances will also come on the credit side. I am talking about the opening balances of every year. Now next requirement of the question was to make the DRR account, means debenture redemption reserve account. Debenture redemption reserve account is maintained in the year in which debentures are issued. So debentures of 15,000 were issued. 15,000 into 100 multiplied by 10%. 10% is the required required amount of DRR to be made by the Companies Act 2013. So in the first year we made debenture redemption reserve of 1,50,000 rupees, and in the year of redemption we are supposed to transfer this amount to DRR, from DRR to general reserve. In general reserve, how much amount will be transferred? The amount equal to the outstanding number of debentures which are going to be redeemed. So here in the first year 3,000 debentures were redeemed. So we will find out the nominal value of 3,000 debentures, which is 3,000 multiplied by 100, and 10% of it will be transferred to general reserve. As you can see over here, 30,000. Then balance will be written as it is. Next year again we will start with the balance of 1,20,000 rupees, and in this year, since 6,000 debentures were redeemed, we will transfer 60,000 rupees to general reserve. You can see over here. In the last year also, again the debentures worth rupees 6 lakh rupees were redeemed. That is why 60,000 rupees, which is 10% of the debenture outstanding, will be transferred to the general reserve. Then last account was an asset account, which is DRI account. So as per the Companies Act 2013, the amount of DRI which is to be invested into unencumbered security is 15% of the amount outstanding. So we can see in the first year the redemption of debenture was taking place for 3,000 debentures. So 3,000 multiplied by 100 into 15%, 45,000 was invested. But do remember students, here we do not have to encash this debenture redemption investment, because in the next year again redemption is taking place, so we will stay invested. Now in the next year we can say the opening balance has come on the debit side, since it is an asset account, and one more investment is made. Why? Because now again in this year the number of debentures outstanding for redemption are 6,000. So for 6,000 the amount has to be equal to 6,000's 15%, means 6 lakh rupees 15%. We already have a balance of 45,000, and 45,000 more will be transferred, because when we take out 15% of 6 lakh rupees, it comes to 90,000 rupees. We do not have to make 90,000 rupees DRI, we have to make DRI for 45,000. Reason being, we already have the balance of 45,000 rupees in our DRI account. Now in the last year, when you are redeeming again 6,000 debenture, in that case now we do not need DRI anymore. Why? Because now we are redeeming the debentures fully. We have reached to the last installment of debentures. So DRI will not be made, because we already have 90,000 rupees in DRI account, but it will be in cash, means the DRI will be sold off. So here we can see the entry by bank account, and this way the DRI account is also closed, students. So this question was very simple, provided you know the journal entries properly. If you have any mistakes, you correct yourself and try to resolve this question. Now let us reach to the next question. In the next question, there were many kind of debentures issued to the people. Like you can see over here, first the debentures were issued to Gerg Limited for purchase consideration for taking over the business. So you can see over here, first purchase consideration is created, the liability is created. So we had taken the assets of 5 lakh rupees, we had taken the liabilities of 90,000 rupees, and the amount of PC, means purchase consideration, which we were going to give to Gerg Limited was 3,80,000. So this amount is actually has come by balancing figure. So capital reserve is balancing figure. Now we will discharge the liability to Gerg Limited by paying them. So it was 3,80,000, but debentures here were issued on discount. So how do we find out the number of debenture? That part is not written over here. PC divided by IP. I always say this formula. What is PC divided by IP? PC means purchase consideration and IP means issue price. So 3,80,000 divided by 95. We come to know there are 4,000 debenture. So 4 lakh rupees will be written over here. 4 lakh. How did we get 4 lakh figure? 4,000 multiplied by 100. And then over here you will write 20,000 rupees. How did we get this 20,000 rupees? This is 4,000 multiplied by 5 rupees each debenture. Then after that we had also taken a bank loan. So first entry for bank loan is being passed for bank account debit to bank loan, and this entry is for issue of debenture as collateral security. This is completely an optional entry, students, because question had not specified whether the company follows the policy of passing the entry for this or no, but I had assumed that we should pass the entry, and I have passed. If you have not passed, then also your answer is correct. Debenture suspense to 11% debenture, 50,000 rupees worth rupees 50,000 50,000 debentures were issued. So we have passed the entry for this. Now student, very important thing over here you have to bear in your mind that interest on these kind of debentures is not given on the debentures which are issued as collateral security. So you have to be very careful while doing the interest calculation in this question. Now next was issue of debenture on the same date to the public. So to public the debentures were issued at par, but these debentures were redeemable at premium. So in first entry we have written 5,000 multiplied by 105 lakh rupees, but in the second entry we have taken into consideration the premium which we are going to pay on the redemption of debenture. So the premium which we were paying on the redemption of debenture was 5%. That is why here 25,000 is written as loss on issue of debenture, and here one thing is missing. This is premium on redemption of debenture. Premium on redemption of debenture should have come over here, which is 25,000, and above over here the amount should be 5 lakh rupees. Okay, now after this we have interest on debenture. Very important point of this question. First of all, interest will get due on 30th of September. When we make the interest due entry, the entry is interest on debenture account debit to debenture holders, and here TDS component was also there. So TDS will also be credited. Now understand how did we find out the amount of interest on debenture. There were two classes of debenture, actually three, but on collateral security you do not pay any interest because these debentures are only for namesake. So first debentures which we had issued to Garg Limited for taking over their business were 4,000 debenture, and these debentures were 10% debenture. So 4,000 into 100 is the nominal value of debenture, which is 4 lakh rupees, and 10% of it for the half year, 20,000 was the amount. Similarly, for 5,000 debentures which were issued to the public, the amount was 5 lakh rupees, and these debentures were 12% debenture. So here also half yearly interest is coming 30,000. So altogether interest was coming 50,000 rupees, on which TDS at the rate of 20% was deductible at source. So 10,000 rupees we have written here. Now the second entry is debenture holders account debit 40,000 rupees, TDS payable account debit 10,000 rupees, and to bank is 50,000 rupees. Company has paid 50,000 rupees out of its pocket, out of which 40,000 reached to the debenture holder and 10,000 has gone into government's account. Now on 31st of March we have to repeat the same set of entries which we have passed over here. Means these two entries will be repeated over here. Everything same, amount also same, and the entry also same, but the date is changed. Here it is 31st March. Interest on debentures account debit to debenture holder to TDS payable, and again the same entry will be passed. One entry is missing over here. That same entry should come over here. Same entry should come over here. That is a debenture holder account debit to TDS, TDS payable account debit to bank. Okay, that entry is missing over here, student. I hope you understand the same entries to be made. Now we have reached to the end of year, and this year we have to pass the entry for writing of the capital loss. There are two capital losses. Number one, loss on issue of debenture, and number two, discount on issue of debenture. And question had very specifically written that there is balance of security premium reserve. So as we know, there are only 5 specific uses of security premium reserve, and out of which 2 uses are writing of discount on issue of security and writing of redemption on premium of any kind, redemption of premium which is paid on redemption. So these losses will be written off from here. We had enough balance in security premium reserve. And second thing which we have to close, and for which SPR cannot be utilized, is interest on debenture. So interest on debenture was 1 lakh, students. Now going to the second part. Question number 8. This was the question of ratios. Under this, various ratios were asked. So let us go to the question. Here, first ratio which was asked was operating ratio. So if I talk about the operating ratio means operating cost, and operating cost, how can we find out? Here you can see the cost of revenue from operation is given to you. We'll take this, operating expenses will be added into this. So this will become cost of operating cost. And see the answer, what is written? Operating cost 9 lakh plus 15,000, and it is divided by revenue from operation. So your answer was 76.25%. Next was quick ratio. What is the formula of finding out quick ratio? That is quick asset divided by current liability. Here inventory was given separately and other current assets. So this will be considered as quick asset, and you have been given current liability. So 2 lakh divided by 75,000, this was the quick ratio, which is 2.67 times. Then debt to equity ratio was asked. under debt to equity ratio, see over here the information was given total debt 2,50,000. Here also many of my live class students had made mistake. They had taken total debt. We do not have to take total debt. Debt's meaning over here is long term debt. So from this debt 2,50,000 rupees, you will deduct this 75,000 and remainder is your long term debt and long term provision. So debt was 1,75,000 students. And liability, this one, your equity. How do we find out the equity? For finding out the equity, we will take 4 lakh rupees and we will take, this is a negative balance. This will also be taken. So 4 lakh minus 47,500 student, your equity was in this way 3,52,500. Now next was proprietary ratio. What is proprietary ratio's formula? Proprietary ratio's formula is shareholders fund or equity divided by total asset. Now how do we find out the total asset? Here the information was given like this. We had been given paid up share capital, we had been given paid up share capital, and we had been given over here other information was this one. We had been given a statement of profit and loss, and we had been given total debt. Means if I talk about all these 3 items, this is the total of your upper panel of balance sheet. Your shareholders fund, which is paid up share capital plus a statement of profit and losses balance, and total debt. So total assets are is equal to total debt. So total of these things will be considered to be total asset, and equity we had already calculated. So here you see, this is your 6,02,500 total asset. How did we get to total asset? Total debt is equal to total debt plus equity is equal to total asset. Like this we reach. The next ratio which was asked was working capital ratio. For working capital ratio, we had current assets. Now what is the amount of current asset? Amount of current assets was 2 lakh plus 20,000. This 2 lakh 20,000. How come? Inventory plus other current assets, and current liabilities were given very clearly. So your working capital was 1,45,000, whereas your RFO was given clearly, means revenue from operation. So this way we have calculated working capital turnover ratio. Now we have reached to the last part of the question paper, 9th question. In 9th question you had been asked 3 ratios: trade receivable turnover ratio, operating ratio, and net profit ratio. What is trade receivable turnover ratio? Trade receivable turnover ratio is credit revenue from operation divided by average trade receivables. In this question, we had been given only closing debtors and only closing trade receivables. So this itself will be considered as an average trade receivable, and credit revenue from operation was also given clearly 3 lakh rupees. So answer is 3 lakh divided by total closing debtors and closing bills receivable. So 3 lakh divided by 1,40,000, 2.14 times was the answer. Next was operating profit ratio. How do we find out operating profit? That is gross profit plus operating expense, gross profit plus operating expenses minus operating incomes. Okay, so but in this ratio, sorry, I think I spoke the wrong formula. In this question, in context of this question, you can see over here what is given clearly. So purchases is given 2,97,500. This will be the part of cost of revenue from operation. Then after that you are being given carriage inward. This is also part of cost of revenue from operation. Admin expenses are given. These are also part of your operating expenses. But finance cost is not operating expense, so we will leave this. Similarly, profit on sale of fixed asset is also not operating income. We will leave this, and discount received is also not operating income. So when we find out the answer, what are we going to take for operating profit? We will take RFO, means revenue from operation, and here we will take both revenue from operation, credit as well as cash revenue from operation, and we will deduct all this. What is this? This is purchases, this is carriage inward, and this is admin cost. All of this, if we deduct, what are we going to get? We are going to get operating profit. The formula is operating profit divided by RFO into 100. So this way, students, we have got our answer as 15%. Now if I talk about net profit ratio, net profit, for calculation of net profit, we will have to take into consideration finance cost also. We will have to take into consideration profit on sale of fixed asset and discount received also. So what are we going to do? We'll take operating profit and we will add we will deduct this 17,000 from there. How are we going to do? See, 2,97,000 we will take, 2,97,000 plus we will add all the other operating carriage inward 3,000 rupees plus finance cost 5,000 rupees plus 40,000 rupees admin expenses. And what are we going to deduct? This is income, 17,000 rupees. So this way we will reach to the figure of net profit. Just imagine how you make profit and loss account. That way you have to think, then you will be easily able to get it what I am doing. So in this way, what net profit we have received, 72,000 rupees the amount of net profit, and this will be divided again by revenue from operation multiplied by 100. So 18% is your net profit. So that's all, student. Paper was simple, but yet it checked many concepts which you could have known or you could have missed. So this is a good opportunity. If you have made any mistake, please do revise and reattempt this paper. This I will strongly suggest. You will get the copy of this answer key on my app. And yes, at last I want to tell you, do subscribe to my channel if you have not yet subscribed, and like and share this video, because in the coming days we are coming up with many revision sessions which is going to benefit you immensely. That's